because we are 2 months away from the end of March, I really want to use this session today to encourage you to sort of emphasize enough to you about the preparation. Get organised now, do what you can between now and the end of March to get in that best position that you can. As they say, is it failing to prepare is preparing to fail? So if you can, let's think about that now. Okay, so firstly then, preparing for year end. Initially then, we talked about the time in the poll, and there was lots of answers that said it was about lack of time management. And that can be such a case when it's just you, your part-time hours, trying to find that time to do this can be so tricky. So just if you can, put some time aside to just going to mute someone there, I think I can hear me. Yeah, to put some time aside so that you can dedicate that to doing this. And not only the actual process of completing the AGAR beyond the 31st of March, but actually between now and the end of March itself. So even if it's something like an hour a week, you know, make sure I'm up to date, get my data entry sorted. If I've got some little niggles that need resolving, do I want to educate myself on what actually the AGAR is, what I'm going to do when it comes in, all those things, thinking about that time and making it available to you. Okay. Alongside that is having up-to-date and accurate data. It's so important because once we get into the next section, which is actually thinking about the AGAR, and hopefully all of you have seen the forms that you need to complete, even those of you, there's quite a lot that said this is the first time you're doing it. I'm hoping that you've all gone and looked at it and aware of what you know, even at top level, what you're going to need to do. But we will talk about it in more detail in a little while. But a lot of it is based on the cash book, so the log of your transactions, what's happened in this financial year. So having that data up to date and accurate is so important. You can't go beyond this. You can't start the year-end process until you have a balancing bank reconciliation as at the 31st of March. So this is to say to you now that if you're in a scenario where maybe you're a little bit behind with your data, or your bank rec isn't balancing and you've been carrying some, you know, annoying difference for a while, it's time now to think about it. You know, get up to date, put that information in, think about doing those bank reconciliations, ideally on a monthly basis, because if you do it monthly, if you do get a difference, it's then a lot easier just to look in 1 month to find out what's gone on. Okay. And also thinking about your VAT as well. So if you're VAT registered, then it's likely your return end date will be the 31st of March. If you're not VAT registered, but claiming it back with via Form 126, I would also recommend that you do a claim, at least annually, ideally up to the 31st of March. It's nice if it keeps it in line with year end. So start thinking about that now. Have you got all the VAT information that you need? Have you got those VAT numbers, those invoices showing that VAT information? And if you haven't, do you need to start thinking about doing that between now and the end of March to get it up to date as possible? Okay. So just a couple of quick extracts from Scribe then. This is just showing that my bank reconciliation balances add up the 31st of December. So ideally you'd want to be doing that now, obviously with the 31st of January today. So again, we can get January up to date and keep on that regular basis so that once we get to March, it's just March to do and we're in a really good position. Okay. Similarly, there's a quick extract from my false fake parish council that I use for training, just to show that I'm checking my VAT information. I've added in my VAT numbers. Okay, so if you've got Scribe or you've got another list that you're using, have you got all that information? Do you need to go and add information to it between now and then? Because if you've done all these things that you can do now, once you get into April, there's not lots and lots of other things to think about. Okay. Moving on then, it's also really important to understand what accounting approach you're going to need to complete the AGAR and the accounting statements in, okay? Particularly if this is the first time that you've done it. This all might be completely new to you, and I've talked to lots of clerks and have said, are you working in receipts and payments or income and expenditure? And they're not sure. They don't really know what's going on. So if you're in that scenario where you're not entirely sure, then the next thing to do is identify which approach you're using, okay? So if you're smaller, you're likely to be using receipts and payments. If you're under 200,000 for the year itself, okay. If you go over 200,000, either total income, total expenditure, for 3 consecutive years, you do have to move to income and expenditure. Okay, but that's only 3 consecutive years, so don't be put off if you've gone over it just because of one year you've had a large grant or some seal money's come in, something like that, that's pushed you over the threshold. If you've gone back below 200,000 for the subsequent year or after 2 years, then you can stay in receipts and payments. Okay, receipts and payments means you just log the transactions as they happen for what they are, regardless of when they relate to. So if you've paid an invoice on this date for this value, that is what you log, and that's all you need to do. Okay, it's very simple logging of information. And if you really don't like accounts and are sort of almost nervous around numbers, you can almost think of it about just keeping accurate records, accurate data records. It's just recording what happened when it happened. Okay, if you're using income and expenditure, then it's a little bit more sophisticated and a little bit more in line with what you might know if you've worked previously in a business, particularly if you've got a clerk or an RFO with a strong financial background, or counsellors with a strong financial background. It will be more in line with what they'd be used to in terms of representing the accounts with what relates to the financial year itself. So at the end of the year, you'll be thinking about debtors, creditors, other adjustments to keep it more in line with what actually relates to the year itself. Okay. As it says there, smaller councils can use to use income and expenditure. So it doesn't mean necessarily that being under 200,000 means you are in receipts and payments. Okay, as you may have opted to use income and expenditure. The easiest way to check is, if you're not sure, is get out last year's AGAR, look at your accounting statements. Line 7 and 8, box 7 and 8 in there is the closing funds and the bank position. If they're the same figure, then you're almost certainly working in receipts and payments. Okay, if they're different, then you're in income and expenditure. Okay, so if you're not clear on that, I'd suggest you go back and make sure you understand that process, because the way that you then complete the accounting statements differs according to which approach you use. If you're finding yourself this year thinking that you may need to change, if you maybe this is you're going to be over that threshold again, so you're going to need to move to income and expenditure, or maybe you've simply decided to move from one or the other, if you've got that option, do also be aware that you need to restate the prior year. So when we do the accounting statements, you will be producing the current year's end of year figures with the prior year next to them for comparison. Both of those years need to be in the same accounting approach. If you did receipts payments last year, but you've now moved to income and expenditure, you need to restate the prior year that was originally submitted in income and expenditure. So if you know that's going to be an issue this year, you need to go back and revisit last year and restate it. And that's something, again, that you can be doing between now and the end of March to get yourself ready to go. If it's going to be something that's a bit close and you've got to wait and see if you're going to go over that threshold again, it's just important to be mindful that that might happen. Okay, just be prepared for that potential that if you need to restate, that might come up. Okay, we'll talk about what you actually need to do with regards to receipts and payments and income expenditure when we get into the numbers bit in a little while. Okay, but initially we need to understand which approach we're using. Moving on then, so the other preparation that you can be doing is understanding the documentation, what you're going to get, what you're going to need to do, and where you can find help surrounding it. Okay, a good starting point is looking back, as I said, at last year's AGAR. Have a look at what was completed previously. There's lots of guidance within it as well, so it's not just the forms that you have to complete. There's lots of guidance about what you actually have to do, and the checklist as well about elements that you need to complete. So that's a really good starting place. Okay, also being mindful of the size that you are with regards to what sort of audit you need to complete as well. If you're under 25k, that's total gross income and gross expenditure is under 25k for the year, you can exempt yourself from audit as well. There are a couple of other criteria as well that's dealt with again in the forms, but that's something to consider. Okay, particularly if you're a new council, maybe you're smaller than you were previously, and that might be different. Okay, or potentially if you were small and you have exempted yourself previously, but now you might think that you're actually going to go over the 25k. So again, it's just understanding that, particularly if something is different or you suspect it might be different, what do I need to do? Okay, it's worth saying at this point that even if you are exempt from audit, you still need to do everything. So it doesn't get away with everything. You still need to complete the AGAR and all the accompanying paperwork. You just don't send it to the external auditor. So you save yourself the audit fee, but you still have to do sort of all the work surrounding it and make sure it's published. It's also worth making sure you've got a copy of the JPAG Practitioner's Guide, because that's a bit like the handbook. Okay, so if you haven't come across that before, make sure you get a copy, because that will take you through all the sections that we'll talk about in a minute that relate in the AGAR, and it's really helpful to give you more information about how to complete it. Also gives you sort of examples in the back about bank reconciliations and other things that are particularly key as well. Another thing then to think about as well is relation to the actual audit that you had previously and whether you need to restate. So I talked just now about needing to restate if you moved between accounting approaches, but it's also important just to be mindful of whether you need to restate either because the external auditors come back and identified something. Sometimes they will and say you need to restate this box to be this figure, etc. Or sometimes if you're a new clerk coming to a new council and you've gone back and reviewed what's been done previously, sometimes mistakes are spotted and you might need to restate from that process as well because you've identified an error that needs correcting. So again, be mindful of that. If you need to make some corrections, have you got them in place? Do you know what you need to do? Do you know what last year now needs to look like if it does need to change? Okay, so these are all the things that I would be encouraging you to do between now and the end of March. And like we talked about with regards to time, put some time aside to do that. You know, often it's easy to think, oh, I'll do that later on in the day if I get a spare 10 minutes here, there. That spare 10 minutes never comes. You know, it doesn't happen. So put it in the diary if you can. Block that time in so that you've got that available to you. Okay. So moving on then, thinking about the actual AGAR itself. So I have a look at what that actually entails. So it's the annual governance and accountability return, and the AGAR is for the period the 1st of April to the 31st of March. So obviously we're rapidly approaching the 31st of March 2024. So we're going to be completing the 23-24 financial year. The AGAR is made up of 3 sections: the internal audit report, section 1, the annual governance statement, and section 2, the accounting statement. So as I said, if you haven't seen it before, it's worth going back and looking at one the council that you're with has done previously, just to familiarise yourself with what it looks like. Okay, I have got some extracts of some of the sections within it so you can see what it looks like. Okay. Firstly, then, is the internal audit report, and it's worth saying at this point that Paul Reynolds is here today, so that he's from the Internal Auditors Forum. So if you've got any specific questions about the internal audit, then I'm sure he'd help out with answering them at the end of the session. Okay, I don't spend too much time on this bit and the annual governance statements because I really like to get into the numbers bit in this session. So if you have got any particular things you'd like to ask, feel free to do so at the end. So this section is the summarised conclusions from the internal audit. So if I move on, you can see what that includes. And at the very least, when you have your internal audit, they need to come in and look at these objectives so that you can give yes, no answers to these points within here. Okay, so at the very least, the internal audit should allow you to answer these questions. Okay. The scope and the scale and the size of the internal audit will depend on your council. Obviously, you're very small, it might be reasonably simple, but if you've got a lot going on, you might have more covered. It might even be that you have it more than annually as well. Okay, but you need to have them come in to look at these different objectives, control objectives, make sure things are basically being done correctly. As it says, the top one there, appropriate accounting records have been properly kept. So it's all sort of based around that you've dealt with VAT correctly, you've recorded things appropriately, petty cash, salaries, all those things related to what we're looking at, and the rest of the AGAR has been done correctly. Okay, so you need to obviously make sure you've got your internal auditor in place to come in and do that. So if you haven't got somebody, again, that's something that I'd recommend that you think about, making sure that you've got someone in place to do so. Okay. These, just to say as well, that these extracts from the AGAR are last year's, because at the moment the current one isn't out. So I'm just taking, so don't worry about the dates within this because it will refer to 22, 23 at the moment. Okay. Moving on from that then is section 1, is the annual governance statement. So there's quite a clear relationship between the two, okay, because again, these are reviewing the effectiveness of the system of internal controls, and you need to have had your internal audit to then allow you to move on to this. One of the specific statements within this is actually regarding, have you had an internal audit? So there's quite a relationship allowing between these two things. And again, it's about, have you got those controls, those procedures in place around running the council, so the way things are done, internal controls, risk assessments, etc. So again, this is sort of a review of what's happened in the year itself. So hopefully all these things are taking place, and then when you review it at the end of the year with your councillors, they need to be able to say yes or no to these points. Hopefully yes. Okay, if you can't, then obviously you're going to need to answer no, but you need to give more information as to why you weren't able to say yes and what's being done about it. So it might be that one of these things had an issue, but you've now resolved it, and you would need to give more information surrounding that. Okay, so as we said, it's sort of all about controls, sort of your standing orders, how things are done, and making sure those things are done correctly. Okay, so if they're not being done correctly, then obviously this again gives you an opportunity to make corrections between now and the end of March. It likely won't allow you to say yes necessarily for the whole year itself, but it does then set you in good stead for next year to be in the right position. Okay, so again, go away and have a look at these and understand what you're actually being asked in terms of yes, no answers. And then we can move on to section 2, the accounting statement. So this is the numbers bit. Okay, this is the sort of key bit. This is where the majority of the work sits, because you have to collate all your accounting, your financial information for the past year and get it into this format that's required. As you can see, as I said, it's 22-23 on here, but obviously we're looking to complete to the end of 2024, and then 2023 will be our comparable year. Okay, so I'm going to talk about each of these lines or boxes, sort of interchangeable really. They're now referred to as individual lines, but a lot of people refer to them as boxes, so we'll sort of use both interchangeably to think about some of the things we're going to be, when we complete them, some things to be mindful of. Okay, so sort of have that in your mind as we go through that process. So sort of the top section 1 to 7 is going to be a calculation to get to our sort of closing balance, which our box 7 is. 8 is our bank position, and then we've got some information about our fixed assets and borrowing, some figures for them at the bottom as well. So when we're doing it though, as we said when we talked a little while ago, we need to be mindful going back to understanding, are we receipts and payments? Are we income and expenditure? Because which one we are will then determine how we complete this. Okay, so receipts and payments, if that's you, then you'll be pleased to know it's pretty straightforward. Once you've got to a position where all your data is in, you've reconciled it to the 31st of March, you're pretty much there, because your figures are going to come directly from your cash book. Your totals at the end of the year will be splits out to those boxes. VAT is included, so you're using gross totals. Okay, if you're in income and expenditure, you've got a little bit more work to do, because you're going to think about what are those adjusting items that I want to make my financial year more appropriate to what actually happened and what's related to it. So the first thing to consider is that you need to exclude VAT. It's not simply the gross totals like it is in receipts payments. So it wouldn't just be the total of all your payments into box 6. You need to take out the VAT, because they are going to constitute a debtor or a creditor, depending on whether you owe VAT or VAT's owed to you from HMRC. And then you're also going to be thinking about those other adjusting items. You know, have we got creditors? Are there invoices that we've had for goods or services up to the end of March that we're not going to pay in April and beyond? Because that then needs to be accounted for in the current year, i.e. up to 2024, because that's when it took place. Equally, debtors, have we got invoices that are outstanding that should have been paid by this point that haven't been, and therefore I want to include debtors adjustment for that as well. So anything that we need to think about, debtors and creditors tend to be the most common, but you might have prepayments, receipts in advance, other things to think about as well. So when you're thinking about those adjustments, there's a couple of things to consider as well. So materiality, the size of those adjustments. If they're really small, you might want to set a level. You don't adjust anything or anything that's under £50, under £100, something like that. You know, if you buy a few stamps or a bit of stationery, you're not going to worry about that. That's sort of fairly minimal. Okay. The other thing is also the irregularity. So just be mindful of if you're thinking about needing to adjust for something that happens on a regular basis. So let's say, for example, we had our grounds maintenance contractor. They do work for us on a set basis every month and they invoice in arrears. So if that happens every month, we pay them in arrears. If we end this financial year with 12 invoices from them, then I wouldn't say we need to adjust anything because it's a continuation of what we're always doing. Okay. The only difference would be is if in March, for example, they went over and above their normal contracted work and did, I don't know, they cut down a tree, whatever it may be, there's some additional work involved in that, then that might constitute something we want to adjust for because it's over and above what they normally do. So just being mindful of, do we need to adjust for every single thing, or is it actually taken account of because it's just a continuation of something that happens on a regular basis? And obviously important to make sure last year's adjustments are reversed. If you've got software, then that should be doing it for you. But if you're doing it manually or spreadsheet, just making sure you've got those calculations in to reverse anything that you'd adjusted for at the end of last year when it was completed. Okay. Right then, there's a quick example from Scribe, just as a few things that you might have adjusted for. So I've got an accrual here. Just to explain that, accruals for things that we know have happened and that we want to make a payment for, but we might not have had an invoice for. So we know something's happened, we've had some goods, we've had a service provided, we're aware there's a cost, we're making an accrual, an estimate of what we think we need to pay. I know cut 10's happened and therefore I've put an accrual in because I haven't yet had the invoice. Creditors almost the same thing really, but you've got the invoice, you know what the cost is, but you know that the invoice isn't going to be paid into the new financial year, and that can often be because of the payment approval process. It's not going to be approved till April, and therefore we need to adjust for it because it relates to something that happened in March. Okay, I also got a prepayment in there, so something I've already paid for but I haven't had the benefit of it yet, so I'm moving the cost to next year. I paid for some building repairs for whatever reason. They've been delayed. I now want to show that cost in next year because it hasn't happened in the current year. And as we talked about debtors, things that haven't been paid for, but where the council has provided the goods or services. So there should be some income showing. So they're just some quick examples of things to consider if you're working in income and expenditure. If you're in receipts and payments, you don't need to worry about anything like this. Even if there are some things that you think should be adjusted for, you don't, because it is that straightforward. Okay. So then now we kind of understand in the background what we need to think about in the differences between receipts and payments and income and expenditure, we can go back to thinking about our individual lines, boxes, and what we need to be mindful of when we complete them. So line 1, balance is brought forward. Sounds super simple, but obviously you want to make sure it matches to box 7 of last year. Okay, so if you're not making any changes to what was submitted last year, you need to copy that forward to become your opening position. If you've had to restate, then obviously you need to be mindful of this, that if the restatement has resulted in a different box 7, then that's your new box 1. So make sure you're very clear that there's a continuation, that box 7 from last year has become your opening position. Line 2 is precept or rates or levies, but precept only for councils. The rates and levies refers to the internal drainage board. So don't get caught out by thinking you need to put anything else in there. It's just the precept. Okay, nothing else, no council tax support, anything like that, just the precept that you've received into line 2. Line 3 is total other receipts. So all other income that you've had in that's not the precept goes into here. As we talked about then, if you are in receipts and payments, that includes any VAT. So any VAT refunds that you've had from HMRC, or if you're VAT registered, any VAT that you have charged, it goes into the gross total. Important to remember not to include any bank transfers. So if you've moved money between your bank accounts and you've shown it as ins and outs, then you need to exclude that. Most software should exclude it for you, but if you have a spreadsheet scenario, you'd need to make sure those lines that exist for the bank rec aren't included in terms of ins and outs and receipts and payments. Also worth mentioning refunds as well. So if you in a scenario where you have had a credit note or a refund or an overpayment refunded by a supplier, despite the fact that you've received that money in, it is not a receipt. Okay, it's a correction of your payment, so it needs to be deducted from your payment total, which is shown as a negative payment. So just be mindful of that in there as well. that you're being clear about what the relationship is between any refunds that you might have had. Okay, if it's from the same originator, i.e. the same supplier, you'd overpaid your electricity bill, they've refunded you, that is netted off against on your payments. In the cash book, you'd show it clearly, but in terms of box 6, it just goes into payments, no receipts there. Moving on then, line 4, staff costs. So as it says there, aware of the guidance as to what can be included. So that again, the practitioner's guide is really good for this, because again, it will relate to all these boxes and lines. It will tell you what needs to go into each of them. So with regards to staff costs, it's just the core salary costs. So salaries, pension, NI, tax, nothing else. You might have it in your budget as staff costs, but things like training or mileage or the cost of the payroll admin team company doing this is not a line 4 cost. Okay, so just be mindful of making sure you only include the core staff costs in 4. Line 5, loan interest capital repayments, pretty straightforward, but obviously if you're making repayments against a loan, you need to record that separately. And then line 6 is all other payments, so everything else that you've paid out for that's not a staff cost and not a loan repayment goes into line 6. And the same is true in sort of reverse of what we talked about in terms of receipts. Gross totals in receipts and payments, VAT excluded in I&E. Okay, no bank transfers, no movements of money. And again, thinking about those refunds. So if you have a similar scenario where you have a customer and you've refunded them, despite the fact that you've made a payment to them to refund them, it's an adjustment to your income. It's not a payment. So just make sure that you're showing them correctly. Okay, if you've got any scenarios like that. So that takes us to line 7, which is the sum of the above. So the first thing here clearly to say is to make sure that it adds up, and that's easier said than done. I've seen a fair few number of accounting statements where they don't actually add up, and some of them haven't even been picked up by the external auditor either. So making sure that 1, the opening position, plus 2, preset, plus 3, all other receipts, less payments out, so staff costs, loan repayments, other payments, is equal to box 7, your closing funds carried forward. Now, if you're in receipts and payments, that closing box 7 should be equal to your box 8. So as we talked about that check earlier, they're going to be the same figure. Your total bank position in line 8 will be the same as your line 7, because the starting position plus all the ins and outs, because you're dealing with those gross totals, no adjustments, will be equal to the bank. So that is your check. If it doesn't match, you've got something wrong somewhere, so you need to go back and revisit where you've added something up or excluded something. Okay. If you are an income expenditure, then it will almost certainly be different. Your line 8, your total bank position, will not be the same as your carried forward position in box 7. Okay, and that's due because if you've got any adjustments in there. So you need to have that bank reconciliation, as we said, so that's going to be your starting point. Before you do any of this, you need that closing bank rec as at the 31st of March balancing position, so you know what you're working to with regards to line 8. Remember to be mindful of anything unpresented. It's only correct to show unpresented items that you have paid out or received that haven't hit the bank, and that tends to be just checks. And now that we've mostly tended to start to move away from checks now, unpresented items are a lot less common, so just be mindful of them as well and don't get caught out by them. Okay, so that's the sort of the main body of the accounting statements, but we've also got boxes lines 9 and 10. So that's your fixed assets and your long-term investments. So that's something else to think about between now and the end of March. Take this opportunity to think about your asset register. Can you update it for any new assets or disposals that have happened in this financial year as well? And think about consistency in reporting. So it tends to be, historically, it's the original purchase value. What was the original purchase value when you obtained that asset, either what you purchased it for, or if it's a gifted asset, such a long time ago, proxy pound goes in there. So not always the most sort of representative of your asset position, but that's how it's dealt with. So you need to be making sure that you're consistent with that. The practitioner's guide doesn't particularly sort of say how it needs to be done, but you need to be consistent. So if you did move to a different way of recording your asset total, such as the current value, you need to just make sure that you do that in the same last year as well. So if you moved between them, just be mindful of comparing them in the same format. So a restatement would be relevant. Making sure your asset register's got all the relevant information. So again, that can be something that you might want to dedicate a bit of time to if you feel that it is a little bit neglected. And also remembering to ignore depreciation. I added that in because I tend to get somebody sort of every year who's come from quite a strong financial background, thinks of fixed assets, thinks of depreciation. And so it's just worth saying that there is no depreciation. It's as simple as purchasing the asset. The purchase is box 6, it appears on the asset. That stays there until it's disposed. When it's taken off the asset register, if there were any income as a result of the disposal, or you sold it, it would show in box 3. Okay, so just sort of that straightforward with regards to that, no depreciation. And then finally, line 10, borrowings, how much you owe on your loans. Okay, tends to be Public Works Loan Board, but should be corresponding to the figure that they provide you, the amount outstanding at the 31st of March. Okay. So lots and lots of information there, but we've also got some other documents to think about as well. So our bank rec, and as I said, that's our starting position, but you're going to need to provide that additional information that agrees to line 8. What's the individual closing balances of your bank statements and any unpresented items? Then you've got your reconciliation between lines 7 and 8. Okay, what's the summary of your debtors and creditors, any adjustments? Income and expenditure only, and also explanation of variances. So when you compare last year's lines against the prior year, have you got variances? So at the moment, this says over 15% for those given lines, but be aware that with the additional external auditors that took over some of PKF's last year, we found that they were asking for more variances. So make sure as part of when you sort of get to grips with what they're going to want from you, that you fully understand what they're asking for, because we found that other auditors were asking for more variance explanations. If you do need to explain a variance, make sure you're very specific about what those variances are. So give numerical explanations, a full breakdown. Don't just, write, I had more income this year because the whole hire was hired out more. You need to give a breakdown of where those numbers have come from. Okay, conscious I've said a lot here, and just to reiterate as well that all the slides will be provided to you, so don't worry about sort of noting everything down, and I'm going to kind of go through this reasonably fast because the signing of documents and publication requirements obviously can't happen until this is all completed, and that's quite far from beyond there. So I really wanted to talk about the preparation at this point. So once you've done the accounting statements, the RFO can sign them off. You're then going to have that meeting, your council meeting, to receive, approve everything as it says there. This would be where you could then approve the certificate of exemption if you know you're below the 25,000 threshold, so that you can be exempt from audit. Okay, so sign all that off. As I said, I don't want to take too long over this. You then need to be mindful of the commencement date for the exercise of public rights as well. So once you've got to a position where you have approved and published your AGAR, you can then make it available for the public to view. So they needs to provide that period of time of 30 working days, must include the first 10 working days of July as well. So I think the 1st of July this year is a Monday, so that makes it sort of reasonably simple with regards to weeks. But again, when you get the information from the auditor, they'll tend to give you a time frame that you're working to make sure that you don't fall foul of that date range, because I've seen that as well, that people get hauled up because they've got the date period that they've provided isn't long enough or doesn't cover these dates that they've been given. So be mindful of that as well. Make sure obviously that your meeting works in with when the date that you're potentially going to provide. Okay. Excuse me. So then if you're exempt from audit, you're only going to send off this certificate of exemption to the external auditor. They don't want anything else from you. They just want to know that you've exempted yourself from audit. You're still going to have done everything, as we said, but you're not going to send it. Anyone else is going to send all the information. So the AGAR, all those other documents that we talked about, and anything else we need to provide, particularly if you've needed to restate or you've not been able to answer yes to all those assertions we talked about, and you've needed to provide additional information. Okay. And then we can think about publishing those documents. So if you're exempt, everything that you've done, you're going to publish. Okay, you can put it straight away, make it available. So all the AGAR stuff, the accompanying information, that certificate of exemption, and then what you've done with regards to the public rights as well. So you've got all that information on there is what you're still going to be providing. So make sure you're mindful of that. If you're exempt from audit, that you understand you're still doing everything, you're just not sending it to the external auditor. If you're not exempt, then you can publish these documents. Obviously, at this point, initially, when you first enter off, you can publish it, but you need to do that, but you're not going to have it signed off from the auditor. So initially, you're going to put that declaration that the accounts are as yet unaudited. When you do get it back, you can update it with the certificate as well. Okay. So as I said, I'm sorry I've gone through that reasonably quickly, but it's all there. It's all in sort of the information documents and the slides as well, so you can follow that through. So just make sure, almost like a checklist, that you're dealing with all those individual elements and making sure they take place. Okay. Because finally, I just want to talk about looking ahead to the new financial year. Now, it's easy to say, oh, that's in April. 2 months from now, I don't need to worry about it. But actually, it's really useful, I think, if you do think about it now, okay? Because a lot of you aren't going to have the luxury of being able to get to the 1st of April, dealing with the year end, and then going, right, I've done the year end, now I can move on to my new financial year. Those things are going to be running concurrently, okay? So to get yourself in the best state you can do, you really want to be set up ready to go. So get that cash book ready. So between now and the end of March, get 24-25 financial year ready to go, get it set up. And if you're in Scribe, set up the new financial year, copy over your structure, put your budget figures in. Great, you're ready to start. Okay. When you're doing all of that, if you've got, whatever it may be, software, spreadsheets, anything of those things, do also think about what has been hard this year. Could you improve it? Just to think about, have I struggled this year? Have some of the concerns that I had when I did that poll at the start of this session, did some of that come as a result of my cash book not really being what I want it to be? Okay. Have I not really been trained on it? Maybe, you simply handed a laptop and you had to start using it. Is it a bit outdated? When it was set up, it was great, but no one's really done anything with it and it's a bit out of date. Do I find it really hard to use? So all those things just to consider when you're doing it, about whether you might want to just make those improvements. Okay. Just thinking about in terms of the structure, based it on your council budget. So the budget that you've set, and I see this so many times, that people have a lovely budget, it's all split out line by line, budget allocated to each of those lines, and then they have a cash book that bears no resemblance to it. So trying to monitor the two, compare the actuals versus the budget, is really, really hard. But if you can do that and allocate those payments received out to those budget codes, it makes things so much easier to report on. Okay. And also think about, has it got enough detail? Do I need to split it out a little bit more? Can I add some more detail? Do I need to put VAT numbers in, invoice numbers in? Does that make it easier than me having to refer to my filing cabinet all the time? Or actually, is it really, really complex? It's only a small council. We don't need to make it that hard. Let's try and simplify it a little bit for me. So they're just some things to think about next year as well. So you can got those 2 months ahead of us now to get ready for this year end, but also thinking about next year as well. Okay. A couple of examples again from Scribe, just thinking about, have I set it up according to me? So for example, I can easily see how much it's costing me to run the town hall because I've grouped that budget section together. So just think about things like that. Is that useful to me to do that sort of thing? Okay, lovely.